Hello everyone. This COVID-19 pandemic has raised public concerns that the coronavirus could be transmitted by cash. To maintain the trust in cash, some of the central banks have started sterilizing and quarantining banknotes. But is this the ultimate solution? In another scenario, in the case of lockdown, how you can convert your physical cash to a digital cash so that you can transfer funds to overseas. But this is not possible when exchange houses or bank branches are close in your area. We have also seen that some governments wanted to feed the poor, and various programs in such countries are underway where physical cash is being given to the people in need because majority of the people are unbanked. So basically this pandemic amplifies the call for digitization, digitalization, digital economy, and top of it, issuance of central bank digital currencies. So what is this central bank digital currencies? What are the benefits and drawbacks? How to implement such a currency, and what sort of models are available? Which countries are really at the advanced stage with regard to this? We can find all this in our today's Technology in Minutes session. So the question is, what is digital currency, or more specifically, Central Bank Digital Currency, CDBC? Now CDBC is the digital form of fiat currency, or you can say banknotes. Now central bank digital currencies are different than virtual or cryptocurrencies because cryptocurrencies are not issued by the state. They also lack the leader tender status declared by the government because of a decentralized nature. However, on the other hand, electronic payment tools and technologies have already started flooding the market. We have seen from debit card to Apple Pay to Samsung Pay to Alipay, these all are predominantly replacing cash. So the question is, who will develop and control the electronic payment systems of the future? Because most of the existing ones like Alipay, M-Pesa, PayPal, Venmo, they all are private firms. What happened if these companies get bankrupt? What happened to the people's money? So people demand is a stable cash in digital form backed by the country. So the question comes, what are the benefits of having digital currency? The biggest benefit is cost of cash. Countries spend a lot in printing and handling of physical cash, and this ratio goes from 0.5 to 3% of the GDP. This is billions of dollars. Secondly, like paper currency, each unit in central bank digital currency is uniquely identifiable, and this way you can combat counterfeit or fake currencies. We have recently seen the demonetization which was done in India because of spread of fake currencies in the market. Third, you do not need clearing houses because money can be paid directly from payer to pay in real time without hanging involvement of any middle party. Now this all leads to the country's central bank can get a greater level of control and can facilitate negative interest rate in the case where countries' exports are under pressure. And the benefit, government can also get the benefit out of it. The governments can prevent illicit activities and usage because it keeps track of the exact location of every unit of the currency, which can lead to streamlining the process of tax collection and combating crimes like AML, CTFs, online gambling. Some of the central banks are concerned by the increased concentration of the payment systems in the hands of very few large companies like Alipay, Apple Pay, and Samsung Pay, or Facebook. And most of them are foreign companies. In this context, some central banks view CBDC as a means to enhance the resilience of their payment system. Now, the heated debate started when Facebook announced launching the Libra in the mid-2019, which jolted the financial market and was considered the real threat against the control of central banks. Facebook said that Libra will keep a stable value because it is backed by a reserve cash deposit of US dollars, British pounds, euros and Japanese yen, similar to currency pegging. And people all over the world will be able to buy Libra using their local currencies. Now, key factor that keeps a currency stable is the credibility. And after immense regulatory pressure, we have recently seen, in fact, some couple of days back, that Facebook have reconsidered their initial proposal and launched another paper for Libra 2.0, which is, instead of creating a single new currency, Libra plans to launch a series of different new digital coins, each backed by a different government currency one to one in fact. This strongly indicates that Libra wants central bank to develop and issue digital currencies and act as a platform to support this public sector innovation. There are 6 core consumer needs with respect to digital currencies: privacy, ease of use, cash-like safety, universal access, cross-border payments, and cash-like peer-to-peer usability. Now, to take care of all these, there are 3 ways, or you can say the 3 choices the central banks have to implement central bank digital currencies. This is the direct way. This means that the central bank directly deals with the citizens by facilitating them to open universal bank accounts with the central bank itself. However, in this case, the claim falls directly on the central bank, and they have to take care of all the infrastructure requirements, KYC, AML and CTFs. Now, the other way is the indirect approach, where central bank issues the CDBCs to the commercial banks and gives the opportunity to the commercial banks to act as a middleman. This is just like in the same way like how the current banking is happening. And the third is the hybrid way, which is a mix of both, which has both the benefits from both of this technique, where there is a direct claim on the central bank, but the intermediaries handles the payments part. CBDC. International Monetary Fund says that in a recent report that more than 30 countries have explored or exploring the idea of launching CDBC, which is a state-backed digital currency that might play a similar role to the one physical cash plays today. And the rationale behind this is that cash is declining and growing ecosystem of private sector payment providers. Many of them also see this an opportunity to monitor illicit transactions. AML, CTF control requirements are growing. Now, Sweden and China are leading the race in issuing consumer-focused digital currencies. People's Bank of China has already started piloting digital RMB with its 4 state-backed banks, payment providers and the telecom companies. On the other hand, in Sweden, the use of cash is dropping at very, very high pace, and nearly everyone uses a mobile payment application to perform the transaction. And it is estimated that retailers could stop accepting cash by 2023. The Sweden Central Bank has announced the launch of a year-long pilot project of its proposed e-Corona. The project will use distributed ledger technology to facilitate the e-Corona transactions. Now, there are other countries also which are into this race, which includes the Bank of Japan, who have recently announced that they are working on this initiative very seriously and would be launching it very soon. Bank of England, Singapore, the island nations, which includes your Marshall Islands and Bahama Islands, Canada, Germany, Australia, Norway, and there are many more countries who are working on this initiative. Thank you very much. I hope you liked the session and the session was informative for you and you have got the real or the fair understanding how the Central Bank Digital Currency environment or the ecosystem works. The what will happen in the future, that only future will tell. Till then, bye bye. Thank you.